But I want to talk about something that's not on his website, but something that you need to know, something that's likely coming down the pipe, and that's his tax reform, because that will have an impact on housing. It's really going to have an impact on everything economically. And so it starts first with the increase in the highest tax rate, which right now, through the Tax Cuts and Jobs Act, is 37%. He wants to go back, before that was passed, to 39.6% for folks that earn over $400,000 jointly. He's going to increase payroll taxes. As it relates to long-term capital gains and dividend rates, which is a real estate-based tax, under the proposed plan, he wants to take the current maximum rate of 20% for long-term capital gains and qualified dividend tax rates, and he wants to raise that to 39.6%. Essentially, he wants to double it for those that earn $1 million or more. Now, we don't know whether that $1 million is going to be construed as gross, adjusted, or total income. But either way, long-term capital gains, when you sell a property, are going to be assessed, and you're going to have to pay the piper based on that investment property if it's not been your primary residence for at least 2 over the past 5 years. He's got some information in there about carried interest and the 20% qualified business income deduction and itemized deductions. There's some things in there that I think you need to know about, but one of the biggest things that he's proposing in order to fund his proposal is for the increased child tax and elderly care credits. Biden is proposing closing the quote-unquote loopholes for property investors and hinted toward the elimination of 1031 tax-deferred exchanges being an area to do so. So for those of you that don't know, a 1031 tax-deferred exchange allows you to sell a property and then invest the proceeds into a like-kind property and defer the capital gain. So, they've been targeted before in previous tax law changes, but the economic importance of a tax-deferred exchange, frankly, has just overshadowed previous attempts to eliminate them. And so for investors that own property that want to sell a property, what's the point of investing if you can't buy low and sell high, right? So when people look at it doing a 1031 tax-deferred exchange, they hire a qualified intermediary, their proceeds are held in safe harbor, and then they are applied to a new property, meaning that money never touches their account. It just rolls into another investment property. So he wants to end the current step up in basis that essentially spares beneficiaries substantial tax liability for capital gains on inherited assets that have appreciated in value. So think about this: inherited gains on inherited assets sold by a beneficiary would generate capital gains tax based on the asset's original cost basis at the time of purchase, rather than the fair market value at the time of inheritance. So if you inherited a property this year that you wanted to sell it, they're going to count that capital gains based on the purchase price at the point in time that property was purchased, rather than the fair market value of the asset based on when you inherited it, meaning that capital gains tax is going to be significantly more. So there are a few other things here from a tax reform perspective, like opportunity zones and estate taxes, that are going to have an impact economically on just the economy in general, but with things like 1031 tax deferred exchanges, on the investor's ability to take proceeds from one property that they want to sell and move it into another without inheriting that tax liability at the point in time of the sale. Because that's the whole point of a 1031 tax deferred exchange. You're deferring your tax liability. So I wanted this to be a kind of all-inclusive guide on Joe Biden's impact on the housing market now that he's taking presidency, is president, and what I think is going to happen here over the course of the next years, up to 10 years, as this housing reform plan rolls out. And, the summary on this is that in many instances, we've been kicking the can down the road ever since the pandemic hit, but now we're punting, right? We're kicking this thing way down the road with eviction and rent moratoriums. forbearance, everything that's going on. And I get it. I get the reasoning behind it. I do think, though, that in the short term, it's just going to fuel more demand in a very low inventory environment. So if you're thinking about buying a house or selling a house, if you're a seller right now, the cards are in your favor. If you're a buyer right now, the best way for you to benefit is to align yourself with somebody that has access to shadow inventory, that's communicating with people that at some point in the near future will be selling their home. And if that's something that you're interested in, we'd love to help you understand the people that we're communicating with that might be of interest to you. Feel free to give me a call, 843-400-8009. That's 843-400-8009. Or check out our website, listingsincharleston.com. I'm out of time. You guys enjoy your weekend. And thanks for listening to the Brian Beatty Real Estate Show on the Big Talker 1250 WTMA.
Join us for another edition of the Brian Beatty Real Estate Show next Saturday morning at 9 and Sunday morning at 10. Contact Brian Beatty online at listingsincharleston.com. That's listingsincharleston.com. Or call him at 843-345-1273. 843-345-1273.